business news, we're news for business people.
Thanks for tuning in. This is Countdown right here on Bloomberg Quint. I'm Neeraj Shah, with me Prabhat Dairy and moments from now. And a quick check on what the markets are doing in the session today. It's an interesting day of trade because we've stayed stubbornly quiet despite these small peaks and small troughs that we've seen. You can see at 2 o'clock as we begin countdown, the market is just stubbornly quiet. Even the Nifty Bank, which was down about 0.25%, a lot of people anticipated it would come under pressure as well, has not really done anything. So it's a similar chart. The Nifty Bank led what the index did, went up, has come flat. The markets too extremely flat. And I would reckon that a bit of green has crept back into the Nifty 50 as well. If you get the heat map up on the screen, it was dominated by red at the start of the trading day. Right now, a bit of green out there. Not too many losers, which is actually a very good thing. And the fall in crude prices or otherwise, but oil marketing companies seem to be right in the thick of things. So the three oil marketing companies actually leading the pack. So IOC, BP, HPCL amongst the top performers. ONGC has about 1% gains. GAIL continues to rise and shine. And today, the support is being given by a couple of heavyweights, including HDFC Bank as well as Reliance Industries. So these are a couple of names which seem to be doing really well for themselves in the session today and helping the markets. Just a quick mention of the contributors and then the volumes. If you can just get that before we get to the mid caps, you'll see HDFC right there. Yes, HDFC, Reliance Industries amongst the others, and Kotak Bank contributing in a big way, and that is helping negate the kind of pressure that is putting in by these two heavyweights, namely ICICI Bank and ITC. And the volumes today ahead of what will arguably be very volatile next 3 or 4 sessions. The volumes have picked up a little bit of steam, close to 5 lakh crores on the NSE FNO side. That's not bad. The cash volumes will pick up as well. But what are the broader markets doing, Pradeep? I sense that there is small bit of recovery that we saw in the headline indices intraday as well.
Yeah, so if you look at, there has been a sudden crash in Nifty, so we'll have to see whether the same has happened in mid caps. But the stocks that I picked up just 5 minutes back would include cement companies that benefit from the relief granted by courts. So JK Cement, Shree Cement, Heidelberg, all these stocks have moved up with good volume. Especially Shree Cement is a stock that looks strongest among all these. Hindustan Copper is another mid-cap stock that one should be tracking today, because although the heavyweight Vedanta is down, Hindustan Copper has continued to move up. Media stocks are also in focus. So you have Sun TV and you also have Hathway. Maybe focus is more on the carriers. So Hathway has seen some decent amount of buying, up 3.5%. Well, Punj Lloyd remains one of the key gainers since morning after receiving those 2 big orders, especially the one in Myanmar, which was worth around 1,200 crore. And also, Apex Frozen is interesting. After 4 consecutive lower circuit, the stock is today locked at the upper circuit once again. 2 big losers in mid-cap space. Century Textiles, that we saw earlier when we heard of the payment that they are going to receive from Grasim, we thought probably the stock will do well. But after the positive opening, stock has come under pressure. It's down 4% even now. Interglobe Aviation, also following the QIP, is looking weak today, closing trading very close to the day's low, down 3.5%.
Okay, very, very interesting. A clutch of names out there which seem to be doing interestingly well today. The FNO space too dominated by a bunch of gainers and losers. Just let's get in Darshan though to talk about what is it that he's observing as far as the FNO activity goes in the session today. And Darshan, good afternoon. What are your thoughts?
Yeah, so basically the markets have just fallen significantly. They were trading rather well, but of late in the last 5 minutes, we've seen a significant amount of fall that's come in. The Nifty has actually moved into the red. What we're seeing is the open interest build-up is also 2.5%. Let's get the Bank Nifty here. The Bank Nifty is also managed to move into the red. So if you're looking at the Bank Nifty, that also the open interest build-up is much lower, so it's down. So there's a little bit of long unwinding that is seen on the Bank Nifty. Now the other factors that you need to watch out on the FNO will be the India Wix as well as PCR. So if we can get them, that will give a traction. So the India Wix has managed to move up since the market have actually given up most of the gains in the morning session. The PCR also, if you're looking at it, it had moved up significantly. I suggest this was 5 minutes ago, so this must have come off to levels back to close to 1.26. So pretty much it will be range bound. Now, where is the open interest build-up happening? This is the total open interest, still at levels of 10,000 to 10,200. There is enough support for the market that is coming in. The real fight is at this level, 10,300. Who wants to dominate it, the bulls or the bears? So this is the most important factor right now. At this point of time, it seems that the bears are having the upper hand. If you get the disbursement chart, you can come to know where positions are being taken. Surprisingly, on the put side today, 10,200 saw the maximum open interest build up, and there is significant amount of put writing even at the 10,300. The markets have fallen, but despite that, there is put writing that is seen on the market, and at higher levels there is a lot of writing coming in. So it seems difficult for the markets to go below the 10,000, above the 10,400 mark, and there is enough support coming in at the 10,200 mark on the Nifty. So that is important, and that is something I'll watch out for. Stock specific, a lot of stocks will be in focus. The first one will be Shree Cement, open interest build up of almost 20%. The stock has actually come off the day's high, it's up 3%, but the Petcoke ruling works positive for the company. The next stock that we'll talk about is the open interest. So we will try to get in the next chart. There seems to be some, but you know, companies like
memory.
Yeah, from my memory, you can see, okay, it's come up. Sun TV has been rather active, you know, over the past few days. Has moved up, open interest build up of 18%. Pidilite was one of the other counters which I remember distinctly. Has seen decent open interest build up, yes, 21% on the long side. There is MRPL which has gained significantly, but that is gained on low open interest. So MRPL is one of the top gainers as far as the FNO is concerned, but the open interest is rather low. So these are some of the counters which are in focus. So the FNO space at this point of time seems to be hovering around the 10,200 to 10,400 mark. That's the range that the Nifty is looking at this point of time.
Wow, Darshan, thanks so much, despite the lack of support there of the wall, but thanks so much for bringing us that update. That's Darshan with our head of research, talking about his thoughts on what's happening in the FNO space. Though Pradeep and I would probably both agree that the focus today has shifted on what the US Federal Reserve will do today, but baked in is this belief or this assumption, and a fair one at that, that the rate hike will come, but probably priced
almost
in.
Given.
Yeah, almost a given.
So looks like all the global markets have discounted that, but we're just waiting for clarity. And you know, like the commodities that have corrected, including gold and silver, you would like the clear signals to come from Fed, and thereafter probably, you know, traders will start to trade the upswing. If you know everything goes well. So I think the focus would also be on any kind of guidance if it comes, although you know we are waiting for the new Fed chief to come in. But Sanjay Mathur, chief economist at ANZ, joins us on the show now. Sanjay, good afternoon. What's your view? What exactly will you be watching out for you know, from the Fed announcement?
Well, there's a couple of things I would say, not just one. I think the first is, if you look, the Atlanta Fed now is saying that growth is suggesting that growth is probably running at 2.9, and the first thing we want to watch out for is whether they're going to upgrade the September forecast for 2018 growth from 2.1 to say 2.5. The second is sort of whether the labor market, which seems to be quite good at this point in time, extremely solid in terms of a low unemployment rate, etc., whether they do talk of any wage pressures. And thirdly, how comfortable they are at this point in time that they can achieve the inflation target. So I think all three factors are going to be very important. It's likely, but with a low probability, that, you know, they would sort of indicate that they'll be willing to go more than 3 times next year. But I think if they do, the initial reaction should be quite negative to that.
Would they be able to, Sanjay, good morning, rather good evening to you or good afternoon to you out there. Would they be able to give any kind of indication to that front? And two, more importantly, would the market go ahead with that belief, considering that there's a change of guard and we'll have new commentary coming in February?
No, I think that, like I said, there's a very small probability right now that would happen, and this is still Powell is still not there as yet. So it's a very small, very small probability they'll do it. Having said that, I think whether the market believes it or not. So far, if you look, the market has had a degree of disbelief. The market still thinks that the Fed would go only twice next year. So I think that as of now, the base case really is that nothing changes on that front. But as I said, there is a small probability that could happen.
The other bit also being that while this policy is important, or this meeting could be important, from all the comments that I have heard, Sanjay, including yours right now as well, certainly seems to be that this policy is more or less a non-event, because it will probably be an event if the Fed doesn't do anything. Otherwise, they'll do 25, and the market will start thinking about whether it's 2 or 3 with more hawkishness or more dovishness in 2018. The last policy in 2017 almost seems to be a non-event of sorts now.
It is a non-event. I think that there is virtually no disagreement right now as to the course of Fed policy. So they do have to spring a surprise to make it an event. And I think that's one of the reasons why you see that, broadly emerging markets have been remarkably calm in this period.
And that was actually my next question, how do you really expect the emerging markets like India to react? Because for a while we have been a bit nervous actually, and traders have definitely felt some pressure at higher levels as far as the large cap stocks or the indices are concerned.
Yeah, I think that as of now, and as we said, we just discussed that this is a non-event, so I expect it to remain that way. Having said that, I think the real issues are that, when you look at India, the issues are becoming more and more domestic in nature outside of oil prices. So if oil prices do rally, I think that does become a negative for India. Apart from that, as you know, we had a pretty horrible inflation print last night. We are not in a situation where growth is accelerating. And we've had, the October trade deficit number, which is 14 billion, and that needs to correct for us to assume that we will be in a very stable position. So you've got these 3 negative events that have happened, and that sort of makes us nervous from a macro standpoint.
Okay, Sanjay, if I can ask you, while we've gotten you to talk about the Fed, since you mentioned India, just one quick thought there. Aside of the Fed rate hikes, the US taxation changes, do you believe that there could be a correlation on flows as a result of the proposed changes that will come into effect in 2018? There are a few quarters of the markets, domestic investors in India, who seem to be a bit worried. I wouldn't use the term worried, but cognizant of that fact.
There is a belief that this tax reform or the changes in the tax structure in the U.S., it would result in an inflow back into the U.S. Having said that, it is probably going to be a very short-lived phenomena. And the reason for that is that despite the Fed tightening, despite the ECB saying, or sort of looking to sort of withdraw some of the liquidity measures, the fact of the matter is that overall liquidity conditions remain fairly strong at this point in time. So I would think that, yes, it is a matter of concern in the very short term, but the medium-term impact is going to be very little from this. If anything, the way we should think about it is that if it does strengthen the U.S. economy, it's got to be good for emerging markets in general.
Mm-hmm. And how do you think going forward, currencies are going to move, because Fed is tightening, and whether we get the expectation of 3 tightenings in 2018 or 4 maybe going forward, do you think dollar will move up here on, and will that result into more selling in markets like India? Because so far in 2017, most of the months we have seen FIIs turning net sellers.
Yeah, so let me speak of emerging market currencies. And I think the way we are looking at 2018 is that, one, for the emerging market class as a whole, the external position is quite solid. Interest rate differentials with the US remain reasonably good. And thirdly, growth is improving. Now, all that sort of combines into a favorable combination for inflows to continue. So as a whole, currencies as a whole should hold on. Now, within that, you do have some degree of heterogeneity. There are some currencies that we are a little more nervous about, and the Indian rupee is one of them. We are not predicting a significant depreciation, but we do think it's going to underperform. Similarly, we have the Philippine peso that we think is going to underperform. So you do have, these are countries with current account deficits, with sort of building up inflation that's sort of building up. So these are the sort of countries, when I say with greater imbalances or greater macro stability issues, those are the ones that will be under a little more stress. But I must also point out that the stress is very little. It's not as if there is a mega trade waiting in the rupee or the peso.
Okay, Sanjay, thanks so much for taking the time out and joining us today and giving us your thoughts. Appreciate you being with us on Bloomberg Quint.
Thank you.
That's, well, Sanjay Mathur of ANZ with his thoughts on, well, what could the Fed give out, if anything, which is special and different from what the market expects. Nothing is what he said. It'll pretty much be a status quo. Anyways, just a quick programming note. Viewers who are tuned in right now or tune in later on in the show, if you have questions with regards to specific stocks or general queries about the markets, please remember to send in your questions on our Facebook pages or on our social media platforms or on email, and we'll try and get some of those questions answered during the course of this show, as well as almost every show that plays out on Bloomberg Quint. So please make sure to send in your questions, and we will try and get them answered from our guests. However, we did have some questions about mid-cap IT and markets at large to Devin Sangoi. That is something that both me and Pradeep posed to him. He is, of course, CIO of Aditya Birla Life Insurance, and he's bullish on mid-cap IT space. Speaking to us a little earlier, he said that the market is yet to price in the growth prospects of the sector. Listen into a small slice of that conversation.
One area where picked up is mid-cap technology stocks. Wow. I think there's a lot of value, high dividend yield. One of my fund has almost, which is based on dividend yield investing, called Value Momentum. We've almost got 15% in mid-cap technology stocks. So these stocks have very low valuation, high dividend yield, and we can see this turnaround is happening. And some of the stocks will get into more than a double-digit earnings next year.
So the story is still pending, you would say, because
yeah,
the stocks
I won't say it is
I
won't say that it is a broad brush, but you need to pick and choose, and we can see when we pick and choose, we can see the earnings will rebound very strongly, because the business has been completely changed to what it was a couple of years back, and there is enough opportunity for all these companies.
And the market has not priced that in completely as yet.
I would say that market has been ignorant. We have seen in last 1 month, 1.5 months, some stocks have given almost 30 to 40% return. But I think if you see FY 18 and 19, where the earning growth rebounds pretty strongly, because this is just a turnaround, and as you see, then I think there's more scope of upside.
And what do you think is really driving it? I mean, the mid-caps doing much better than the last.
So again, see, some of these companies are in the range of $200 million to $800 million. They are quite small. They don't have baggage. They don't have so much of commoditized business. And if they had, they have been able to pare it down. So flexibility to change the business mix is quite, easily done as compared to the last guys. Second, they're focusing on the new technology, or they're focusing on the niche. And if you see, the digital spends have started moving up, and they've been moving up. So only the mix was dragging the overall sales. So we are seeing good cash flow, reasonable valuation, and growth coming back.
Well, that's all about mid-cap IT, at least Devin Sangoi's view. They've invested in a couple of stocks, and those stocks have done reasonably well. Obviously, not at a liberty to name those stocks, so that we will avoid. However, we are at liberty to talk about MRPL because that stock is buzzing in trade today. It gained the most in 3 weeks, and there is a very interesting technical perspective that Pradeep has on the stock. Pradeep, why have you chosen MRPL today?
Well, MRPL is actually interestingly moving up with good volumes in today's trade. And if you look at the overall pattern in this stock, for last 6 months or so, the stock has been moving in a narrow band, between say 120 to 145, 150 odd levels. And today we have seen buying emerging at lower levels with good volume, although a little while back Darshan had just mentioned that there is not much open interest build up, so maybe there is not much activity in the FNO. But if you look at the cash volume, it is at least double as compared to the average of last 20 days. But that's not all. As I mentioned, it's a swing trade opportunity. It's not really a very long-term kind of a call that you could see here. But the stock has kind of engulfed yesterday's entire decline and is moving up. It's quoting above yesterday's high at this point of time as well, when market has overall crashed. And even on the oscillators, if you see, looks like there is a crossover and probably a bottoming out is signaled there as well. So this is a swing trade, a typical swing trade that may take this stock to 140, 145 odd levels from these levels. And this is also a stock which is kind of not a very high beta stock. So in such volatile markets, Neeraj, looks like this is an interesting idea as far as the chart patterns are concerned. But as we say this every day, that this is not really a recommendation. This is just an interesting chart pattern that we have observed.
Yeah, but we can ask one of our guests once he comes in to talk about MRPL and whether he follows the pattern or no. But thanks, Pradeep, for giving a lowdown on what the chart of MRPL looks like. At some point of time, I'll ask one of our guests about how the chart of Prabhat Dairy looks like, because while there was a small bit of a pull down yesterday, look at that stock in the session today, up 13%. And then look at the stock over the last 30 days. It's a big move that we've seen in this one. Somehow it's defying the odds, moving completely in an opposite direction to what some of the other companies might be doing as well. Yes, the other dairy companies are active, but Prabhat Dairy is in a league of its own, quite frankly. Big move, 233. These are life highs, and it's 3 million shares that the counter has traded. Remember, the management met a bunch of investors over the last couple of days. I don't know if this buying of the last 2 or 3 sessions that we see is as a result of that. I can safely tell you, though, why there is buying in the cement companies, because there's a bit of a relief that has come in for cement companies, a big one at that. The Supreme Court has lifted the ban of pet coke usage in northern India. The Apex Court also wants the government to consult all stakeholders before imposing a ban on pet coke imports. Nikki Birchandani joins in with all the details. Now, Nikki, I want a clarification as well, because I missed out this news earlier. Is this lifting of the ban for usage of pet coke as a fuel, or is it only as an ingredient? And then couple it up with which companies stand to benefit?
Okay, so we are not clear as to how they have allowed the usage, because we don't have the regulation being put out at yes. What they have said right now is just that they have allowed, the Supreme Court has allowed the usage of pet coke, and they will set out regulation on usage of pet coke. Now, cement industry has appealed the court in the past, saying that the pet coke has been used as an ingredient and not as a fuel, which pollutes the environment. Based on that judgment, on that appeal, we are seeing this relief coming in for these stocks. However, it's yet to set out a regulation for highlighting the usage of the pet coke. The other bit that is important enough and needs to be highlighted is the pet coke import. Now, the Supreme Court says that the government will consult all the stakeholders before deciding upon the ban of pet coke imports. Now, if you look at the consumption pattern, India consumes a total of 23.6 million tons of pet coke, out of which around 12.8 million tons is produced domestically. But then if you're just supposed to assess the impact per se on this development, then if you look at the pet coke prices, the percentage of your overall fuel cost, then obviously Shree Cement stands to benefit the most out of this development, because it uses 100% of its pet coke as the overall fuel mix. The next on the list we have Mangalam Cement at 96%, JK Lakshmi Cement at 80% of their overall fuel mix. So these are all the north-based players that I'm talking about, because the ban typically came through in the 3 states of north, that is UP, Uttar Pradesh and Haryana. So it is obviously a relief coming in for these north-based companies. But we also have some set of operations of Ambuja Cement and Ultratech Cement back in the northern region.
Wow, okay. Thanks a lot for that, Nikki. So again, I think as Nikki said, not we're not clear exactly as to whether this is to be allowed only as a fuel or as fuel or only as an ingredient in the process of manufacturing. The cement counters are having a bit of a relief run in today's trade. So do watch out for almost each of these counters. They seem to be doing okay. Before we get into our next story, and that mid-cap IT stock is doing well, since we are talking cement, let's get in our guest and try and see what some of the charts of the cement companies are looking like, because they have moved up in the session today. And Rahul Randeria, he's technical analyst at IFCI Financial Services, joins us right now on the show. Rahul, thanks so much for joining in. Coming to you a bit early, simply because we were talking cement and the stocks are active. Any stock that stands out for you?
Yeah, as of now, if you look at the cement stock, we're consolidating for a couple of days, maybe 3-4 days back, and 2 days back we have seen a rally, and again the stock has seen some sort of pressure. But at lower levels, what important thing we have seen that the lower levels we have seen a supportive action seen at the particular stocks, say ACC, Ambuja. So at these levels, I am liking ACC as well as at current levels. One should buy with a stop loss of 1680. On the upside, I am looking at the target of 1780. This would be a short-term positional call. Next stock which I am liking is Ambuja Cement, where a similar kind of pattern has also seen. Yeah, sure. Definitely on the we have seen a high wave candle, and again the stock is picking up slowly and gradually. The momentum again supported with strong volumes. So definitely from current levels we could see an upside till the levels of 288. One can buy with a stop loss below 260.
If you could look at the two more charts, JK Cement is one which is up 5.5%, and Shree Cement which is up around 3%. These are the key beneficiaries actually of this news so far. If you look at the price volume movement today, any views?
Yeah, Pradeep, if you look at JK Lakshmi Cement, the stock has been moving slightly upward with lots many of dojis formation, supported with a consistent volume, and today we have seen an engulfing bullish pattern. So today's this last Fagans cool off should be used as a buying opportunity. I feel the stock can again retest the levels of 445, which was the prior pain area. One should buy with a stop loss of 405. Shree Cement, definitely we have seen a very huge spike today. Again, stock has given up the gains. I think that in Shree Cement being a illiquid stock, it could consolidate for a couple of days, maybe in the range of 18,000 to 17,600, and again we could see a next leg of upside rally till 19,000 in next 3 to 4 months. So definitely on correction should be used as a buying opportunity with a stop loss below 16,800.
So JK Lakshmi Cement is the one that Rahul likes here. But let's move on to the other sector, Infotech, mid-cap Infotech this time. L&T Infotech has gained the most in a month today after its investor presentation laid emphasis on digital ways of working. Agam Vakil is here with the key takeaways of the presentation. Agam, what are the details?
Well, that's right, Pradeep. We have seen L&T Infotech surge after it held an analyst meet, and what's come out of the analyst meet is its increased focus on digital analytics, Internet of Things, as well as automation. This is something that a lot of mid-cap IT companies have also been talking about, along with your giants. But when it comes to L&T Infotech, they are looking to create their own niche in this area, and some of these details that have emerged from this analyst meet is what is driving investors to buy into the stock right now. So from what we understand, the company has already garnered a total contract value of around $300 million in the last few quarters, and this involves one more than $100 million deal. This involves well over 5 $10 to $30 million deals, and as many as 4 $30 to $100 million deals. And in terms of its plans and strategy ahead, L&T Infotech looks to focus on analytics and Internet of Things specifically. Internet of Things is where they are using a lot of platforms and working with their clients to come up with new areas and find new business models in terms of experimentation. The company is also marketing its efforts to enhance its sales pipeline, and this is likely to see more and more revenues come in through their orders. And this company is also making an effort into brand awareness, which will also stand out eventually. And again, as I've already mentioned, that we are looking at a total contract value currently standing at around $300 million. So we'll have to wait and watch as to what this does for margins as well as L&T Infotech. But for now, investors are certainly happy with the outcome of the analyst meet.
Agam, if I can throw this out of the dark at you, how does this one compare on the valuation front compared to some of the other IT names? The reason I ask this to you is because a number of times while over the last few days, as you would have seen doing your shows too, that L&T Infotech creeps up as one of the key movers. It's really done well. Is it now very expensive on the valuation front compared to some of the other peers?
All right, Neeraj, so I will not be able to give you exact valuations, but I can tell you this, that in the mid-cap space, Persistent and Mindtree are relatively more expensive as compared to L&T Infotech, which means that L&T Infotech still has some way to go before it catches up. In terms of prospects, L&T Infotech has delivered over the past couple of quarters, and its margins, if they don't match up, they've certainly done better than a lot of its other mid-cap IT companies. So there is always the case of L&T Infotech catching up with the other mid-cap IT companies. Neeraj.
Okay, fair call. Thanks a lot for that, Agam. We'll of course talk more about this stock as well, but it's had a fabulous run really. The last 6 months, L&T Infotech has been amongst the principal gainers. But I must say that a bunch of other mid-cap IT names too have done well. And as I think Devin was saying, bottom-up, stock-specific, each of these have a business angle or a business cycle that is working really well for them. So no reason why they should not be gaining. So good gains really for L&T Infotech, good gains for Sonata Software, good gains for Hexaware. You look at the 6-month chart for almost each of these names. Let's bring up the 6-month chart of L&T Infotech. Then show you what's happened over the last 6 months for Nucleus Software. L&T Infotech 32%, not a mean feat. It's good going really in the last 3 odd months. Nucleus Software 6 months 47%. Sonata Software I think from 155 odd to 232, that's another 50% as well. So clutch of these names have given really strong returns. Rahul, just wondering, is there a trade now possible? If you don't have the view of the entire space, maybe L&T Infotech as an individual stock.
See, these are the mid-cap stocks where we have seen, the rallies are not long-lasting. The stocks moves 10%, 15%. Again, these are the stocks goes into a consolidation mode because these are not traders' favorite. But definitely looking at the current setup, L&T Infotech has a tendency to move sharply. Again, it consolidates in sideways to upward move. So definitely today is also the same pattern. We have seen a sharp up move. So in coming days also we could see a sideways consolidation, but that would be on the upper side. So maybe any intraday cool off in the range of maybe 1040, 1050 should be used as a buying opportunity. Short to medium term, again stock can test the levels of 1200, but one has to trade with a very strict stop loss because liquidity seems to be dries up when after a rally. So definitely it is a low liquid stock. One can buy with a strict stop loss of 1030 on the downside. So definitely one has to pick up the momentum at the start. Once the momentum is gone, one should avoid such kind of calls.
Rahul, also if you could look at two financials actually, Muthoot Finance and Bank of India, because if you look at these segments where there is a lot of selling in last half an hour of trade, these two stocks definitely stand out. They have hit new lows, I believe. How do they look on charts?
Chartically, if you look at the stock, both the stock has been under pressure for a very long period of time. If we see the last 2.5 months. If you talk about Muthoot Finance, the setup is oversold. Stock is just nearing it near the major support area of maybe 400. So some more downside could be seen, but at this level I would not recommend to go short because it could be a trap because into deep oversold territory. I feel stock could settle down in the range of maybe 400, 390, and then after that we could see a technical pullback. So I would rather wait for the levels to come. I will see how the price behave at those levels and then take a call. If we talk about Bank of India, 2 months back when we have seen a stock rallied intraday, 50%, again slowly and gradually the momentum was through. It made a high of 215. The stock has rallied from the levels of 130. So currently it is into a time correction as well as price correction. I feel that the stock could retrace at least 60% to 70% of that particular rally. So I would be comfortable looking into the stock to enter at the levels of 155 to 152. At current levels, if there is any pullback, maybe 178, 180, that should be used as a selling opportunity for a short to medium term perspective. Maybe in next 2 to 3 months, I feel that stock could test the levels of 155. And one should go short at pullbacks with a stop loss of 190.
Okay. Look at HCL Technologies. I think it's had a bit of a gash. The intraday should come up on your screen for HCL Technologies. No, not really. Okay. Yeah, maybe I was reading something else. What else? Prism Cement has done well and has inched up further. Should come up on your screen as well. About 3%. So there you can see it had a spike, then a cool off, and then again a bit of a spike in the last few minutes of trade. Delta Corp, I think, has had a bit of a move. So that one too is looking good. But it is the banks which are under pressure. The Nifty Bank now back to over 100 points down, very close to nudging the 25,000 mark. And in fact, it dipped momentarily below that as well. So this is that one basket that is looking weak. And difficult to argue, Pradeep, as to what could be spooking the Nifty Bank further. Would it be the general market mood? Would it be this slight further hardening of yields and the fact that CPI has become so bad? You would probably believe that is the first guess. But could it also be the factor of the markets weighing in ahead of the Bank Nifty expiry, which also happens ahead of the exit polls, which could probably have a bigger bearing on what the Indian markets do? I don't think the markets would be too perturbed about the Fed, but the exit polls is a different story altogether.
Definitely, that is the case. And even, in terms of the impact of Fed, because Fed will probably have some impact on currency, if at all. And that
you think so? You don't think it's priced in?
Affected. Well, I think, rupee has been really strong for a while now. And if suppose, dollar index breaks 94 or 94.5 kind of levels going forward, there could be some weakness in Indian currency because we have been holding strong. We have kind of, the currency has really surprised on the higher side. So in case dollar gains, more than what is expected, like what our expert had also mentioned, that markets are factoring in 3 rate hikes into 2018. But what if there are 4? What if the dot plots indicate, that the FOMC members have turned hawkish and they're now expecting 4 rate hikes in 2018? Then markets will react.
Hey, if I had dollars in my pocket, I would bet them on there not being 4 rate hikes. Even though I don't understand the US economy that much, but that would be a bit too steep. After 1 now, to have another 4.
So 3 is already there as per the dot plot that came after last meeting.
Yeah.
So if that 3 becomes 4, that would be interesting.
In fact, maybe that is the only thing that could surprise the market this time around, right?
Yeah.
In her swan song, can Janet Yellen give a surprise on the dot plot? Hey, for all you know, and whether the markets go out and believe that.
No, but that is the consensus of the FOMC members. So the other members might have their own mind. That they'll not really go with Janet Yellen, and therefore there is a possibility. So that could be a risk at this point of time. We're just speculating, and if you were long on Nifty Bank ahead of expiry, ahead of Fed, and ahead of the exit poll, would you rather not, at least lighten your position when markets have crashed? So you don't know. Maybe traders would be really nervous at this point, whether you are long on Nifty or Nifty Bank.
Maybe as this should be. I must say, the oil marketing companies too have come off a bit from the highs that they were trading at. So IOEC is now about 1.5%. BPCL is just up about 1%, so a bit of a cool off that pocket too. Let's get in Hadrien Mendonca, senior analyst at IIFL, who also joins us on the show. Hadrien, good afternoon. Thanks much for joining in. Hadrien, what would your position on the Nifty Bank be now? We spoke just a few trading hours back. I think we spoke yesterday. The position may have been slightly different then, but what would your position be now that the Nifty Bank has corrected quite viciously yesterday, another 0.5% today, and we have the Bank Nifty weekly expiry ahead of the exit polls tomorrow?
So the positions definitely should not be long, and as you've seen what has happened in the last 5 days, 3 days of rally has been sold into in the past 2 days. So I think ideally one should not hold on to your long positions because of the huge events that are lined up in the coming days. So I think definitely the way I'm speaking to a lot of people around in the markets and a lot of clients, the strategy is slightly changing from buying on declines to selling on every rallies. So that's actually what a lot of people are trying to get into. So as you saw the last 5 days as well, we saw solid selling pressure coming, especially in the metals and pharma. Only the IT pack is somewhat, trying to hold up too. But definitely Bank Nifty, one should not hold out your long positions at the current juncture, and definitely if you're short, you can comfortably hold on for the events that are actually happening.
Okay, so don't hold on to the long position really. That is the advice coming in. The way market has sold off, but definitely you'll have different views on different stocks. So one pocket which has been doing well is media, as I mentioned earlier, and Hathway Cable is one that stand out, still up around 3.5 to 4%. With good volumes so far, around 10-11 lakh shares have traded on NSE itself. Rahul, have you had a look at Hathway Cable? Do you see any trend here?
Yeah, last couple of days we have seen the stock has tried to pick up the momentum from the levels of 34. The spikes are very sharp, supported with strong volumes. Again, for a couple of days the volume goes down, again the spikes come. So definitely there is something momentum building up in the stock. So definitely from the current levels, stock could test the levels of 46, which is this intermediate resistance. So at current levels we could see some sort of support in the stock. So if it could be a high risk call, because the stock is volatile for last couple of days, so it could see wild swings coming in the stock, but the trend is positive. So if anybody wants to trade, can trade with a stop loss of 38 on the downside with a target of 46 for the short to medium term.
Another interesting pocket here that we see is Puravankara, which is down around 4%. If you look at the volumes, significantly high volume at this counter. You also have Kolte Patil. So these mid-cap real estate stocks have been doing well over last several sessions, and they have been outperformers. Rahul, would you advise traders to book profits now in these two?
Yeah, definitely at current levels. If we first of all, if we talk about Kolte Patil, the stock has witnessed a long breakout at the levels of 271. Then it rallied sharply to and made a high of 404. Now currently the stock seems to be into a time and price correction mode. So definitely at these levels we could see some sort of profit booking coming in the stocks. I would also recommend to book profits, but I'm not seeing major downside from the current levels. Yes, definitely stock could correct till the levels of maybe 320. Because there is the cluster of support zones. So maybe at those levels, if anybody wants to trade, sell it now. Again, if he wants to enter at the lower levels, they can use this strategy, sell off the delivery, again try to enter at the 320. If we talk about Puravankara, the stock has seen a very long consolidation breakout. The consolidation had lasted from 2008 to 2017, and the breakout point was just about 140. And stock is also trading just near those levels. So the stock is preparing for a long-term uptrend, but at these levels some sort of cool-off could be seen. Stock can test the levels of 140, 135. So short-term traders, those who have bought a couple of days back, can book profits, but those who want to enter can try to enter in the range of 135, 140 for long-term investment, and one should place stop loss below 115. But definitely at current levels we could see some sort of profit booking.
Okay. Just before we get in one more story, I don't think we've asked the strategies for this hour to our guests. So Hadrien, to you first, your top trading ideas at this hour.
Yeah, so we are bearish on two stocks currently given the market scenario. So first is Tata Chemicals. We are advising to sell Tata Chemicals December futures. The stock is actually unable to break its previous peak, and hence it is actually creating a double top kind of a formation. So I think this momentum on the downside may continue further going forward, and we're seeing a target of 700, and one should keep a stop loss of 737 on the as a stop loss for the strategy. Second stock that we are bearish on is Oriental Bank. One can sell the December futures, keep a stop loss at 122, whereas you can play for a target of 115. Now the reason being is that the stock has actually broken down from a consolidation pattern on the daily charts, and the trend and strength analysis is also indicating that the current momentum is slightly weaker. So I think we see another 5 to 6 rupees downside. So hence the target of 115, stop loss of 122.
OBC and Tata Chemical, these are two short trading ideas coming from Hadrien. Rahul, what about you?
Yeah, Pradeep, I have two buy calls. First is a buy in Ambuja Cement. As we discussed earlier, that the stock is picking up momentum after a consolidation of last couple of days. Intraday dip should be used as a buying opportunity with a stop loss of 416 on the downside, and upside target would be 288. My second buy call is in Chennai Petro. Again, stock has from the deep oversold territory. The stock has rallied from the levels of 405, and currently it is on the verge of a breakout of a rounding bottom formation on the short-term charts. So definitely, traders can buy at current levels with a stop loss below 416, and for the target of 449 for short to medium term.
Okay, so these are two buying ideas coming in from Rahul. Chennai Petro and Ambuja Cement. That's interesting. Two shorts from Hadrien and two longs actually coming in from Rahul.
Now, before we get to our fundamental guest, just a quick story update, a quick news update. The government's removed the 31st December deadline to link Aadhaar number to bank accounts. The Gazette notification removed the last date altogether, adding that the date will be notified later. Nikun joins in with the details.
In a Gazette notification, the government has removed the December 31st deadline of mandatorily quoting Aadhaar and permanent account number for opening of bank accounts and certain other financial transactions. The notification says that now Aadhaar and PAN numbers will have to be quoted for opening of bank accounts and certain other financial transactions to a later date that will be officially notified by the central government. The amendment has been made in the Prevention of Money Laundering Rules 2005. Remember, this comes after the central government informed the Supreme Court that it would extend the March 31st deadline of linking Aadhaar with certain services and welfare schemes.
Okay, a bit of a exaggerated fall now on the markets. The Nifty bank not as much as the Nifty in the last few minutes, but bring up the Nifty 50 and look at that sudden crack. Yes, the Nifty bank too has fallen, but it is the Nifty 50 which is showing a sharper fall. 10,180. We are wiping off some of the gains that we made in Thursday, Friday and Monday session over the last 2 days. It's a very sharp fall. The Nifty bank too should come up on your screen, and a bit of a fall out there too, but nowhere as sharp as what the Nifty's fall has been. And just get the top losers, get the Nifty 50 losers on the screen for the benefit of our viewers, and just show you which are the stocks that are now correcting the most viciously. Vedanta is down about 3%. I think there's some weakness in ICICI Bank which is accentuated. Bajaj Finance is at 1665 from highs of 1903 or 1930 or thereabouts. And there is weakness in Cipla too, about 2.5%. So some strong falls that have come in to certain banking names and a couple of pharma names out there as well. Aurobindo and Cipla trading with a fair bit of red. I would presume that the short positions have only accentuated on both the key indices. Lancelot Cunha, CIO at ValueX, joins us right now on the show. Lancelot, if you had the choice of not putting in money right now, withdrawing and staying on the sidelines, a bit of a trading call, would you do that ahead of the Fed today, ahead of the exit polls tomorrow, and ahead of the Gujarat election verdict coming out on Monday morning?
Well, I think it's, I don't expect any of these events to really have a major impact on the market at this point of time, given that there is significant amount of liquidity available for investment, and that is coming in on a monthly basis. So that will cushion whatever kind of negative sentiment that we may see. So I don't think it's a wise decision to pull out everything and sit on the sidelines. But yes, wherever companies, valuations had run up in ahead of their earnings and earnings growth, and where you see that earnings is probably recovery is going to take a much longer period, there is a case to book some profits and stay out in those counters. But otherwise, generally as an asset allocation tool, I don't think it's wise to move money out, because the move could be very narrow, and if there is a positive outcome on either of these macro events, then we could see market sharply move back up. So I think it's better to remain invested, but be conservative and look at counters where earnings growth haven't delivered and the stock prices have moved up, and take some profits off the table in such counters.
But if you really look at it, Lancelot, it's not only these events or a short-term view, but if you look at a large number of heavyweight stocks or the index stocks, they have been going sideways since July now. Even the index itself, if you look at it, is finding it difficult to hit new highs. So probably there is more to markets that is kind of triggering a sell-off at higher levels, or maybe investors are cutting down their positions, booking some profit. What's your view really? Do you think these levels are valuation wise justifiable, and we can really see markets much higher in next quarter?
Well, there was no doubt that valuations were, above the actual values, because, on the underlying side, on the fundamental side, you did see that kind of growth justify the higher valuations. However, what has happened is that we're coming off two different events. You've seen GST getting implemented, so that has been a major event, and we are slowly seeing sales come off, and we had this demonetization maybe close to a year ago. So the impact of these two major events will take a while for corporates to grow. But if you look at the earnings season ahead for the next year, we're going to come off a very low base. So since, the growth is always looked at based on the low base that we have, and given that background, I think then slowly valuations will become justifiable. So there may be a time correction in the market. And rather than trying to trade in and out of these time corrections, as an investor, it would be better to stay put, because these corrections may be relatively small, and you may not always be able to time it right, and that way you would not be left out when the actual rally in terms of growth comes in.
Okay. Thanks a lot for that, Lancelot. That's an initial thought on the fundamental end as well. But just looking at stocks which are falling apart quite strongly today, I think financials come right up there. Yesterday or day before, me and Pradeep and Navneet were talking about what's happening with Bajaj Finance and the way the stock has fallen from the highs, and whether there is merit in looking at that company afresh, because every time Bajaj Finance has given a sharp drawdown in the last 18 to 24 months, it has been bought into very, very strongly. The question mark only remains whether this can be yet another case of that drawdown being bought into in Bajaj Finance case. We'll get to know in a few days from now. Lancelot, any thoughts here? Some strong NBFCs and the corrections that we've seen there, Bajaj Finance in particular.
Well, I think as far as the NBFCs and Bajaj Finance in particular is concerned, valuations have really gone up astronomically. So many of them are trading at 8 times book, 5 times book, which is, which you cannot see that kind of growth sustaining for the next 2 to 3 years. So I think from an NBFC perspective, one has to stay out of these NBFCs or book profits if one is invested in these NBFCs, because valuations will normalize over a period of time. And as growth in the, in the asset growth slows down, I think then the market will start to more realize that and bring it down to normal valuations as compared to these outlier valuations. So I would stay away from NBFCs till there is some serious correction. Maybe at least you need to see a 10 to 15% correction minimum from these levels before you can start saying this is an attractive asset class to be invested in.
It's interesting. I don't know if this is based on the premise of whether or not some of the cost of funds for some of these companies will go up or no, but remains to be seen. I think today we had the management of Bharat Financial, Pradeep, and they were saying, or at least Ravi Kumar was saying, that for a lot of these NBFCs, their cost of funds are not really, 60% of the cost of funds are not dependent on banks. They are able to raise this money, known story, but just repeating for the benefit of our viewers, are raised through a lot of other avenues, including mutual funds, etc., which subscribe to the paper of some of these NBFCs, and therefore maybe this theory of a consolidating interest rate scenario means higher cost of funds, substantially higher cost of funds may not necessarily be true. I'm not saying that's the reason why these stocks are getting spooked. Lancelot makes a very valid point. The valuations of some of these stocks are fairly high, but the fall into Bajaj Finance or a couple of others has also been fairly strong.
Probably you didn't have any reason to sell. Now at least you have one,
which is
that's the rising funding cost, maybe. But we'll come to know only when the results come out and managements really tell us how the funding cost has really moved. But there is a increasing selling pressure in, say, Canara Bank, PNB, Allahabad Bank. All these PSU banking stocks are just getting hammered. Rahul, if you have had a look at any of these charts or any other PSU banking stock where you see a short trade right now?
Yeah, as we discussed earlier regarding Bank of India, similar stories in each and every PSU banks where we have seen a sharp rally, maybe 50-60% in 2 days, and then again the stocks are looking at the price erosion slowly and gradually. I am not seeing a very sharp cut from these levels, but a stock would retrace maybe 60% to 70% of that particular day's rally. So at current levels, Punjab National could drift down to the levels of maybe 162. So one can go short. For it would be a short-term call with a stop loss above 175. If we talk about Canara Bank, again the stock is just nearing towards the crucial support of 348. So maybe these are the areas where the sell-off could take a pause. Stock could consolidate. These are the price behavior, how after a spike price behaves. So I feel slowly and gradually the stocks the prices will go down, it consolidate, and then we could see a sharp rally. It would take some time, but definitely at these levels any high risk traders can go short, but not a major downside is seen. It will be slow and gradual move on the downside.
Okay, that's interesting observation too. Hadrien, just looking at the commodity names today, some of these are coming off, discounting cement, but the metal companies certainly under a bit of pressure. I don't know if you gave an idea in one of the metal stocks, but if not, any thoughts on trades in Vedanta or Tata Steel, or for that matter, Hindalco?
Yeah, definitely. Overall, the metal packs are looking very weak, and Vedanta is one stock that is also showing signs that it may, fall further from here on. So, the stock has actually shown a good momentum in the past 5 days, but today's move has actually, negated a lot of positive vibes that was visible. So, yesterday we saw a long-legged dragonfly doji being formed, and, a break below the doji's low has, further weakened the overall scenario for Vedanta. So definitely one can go short on Vedanta for a target of close to 278, 279. One can keep a stop loss of today's high that is close to 293, and go short on Vedanta with a short-term perspective.
Okay, so this review coming in on Vedanta right now with the short-term sell call is being generated. Lancelot, do you have a view on these metal, steel, as well as base metal stocks? We have seen a lot of interest at lower levels in base metal, and also steel companies I think are buzzing more because of likely acquisitions under the bankruptcy code. We have already seen a lot of bids coming in, at least for one project. Do you think this could turn out to be a trigger that would kind of set a valuation benchmark, and there might be an opportunity?
Well, yes, I agree. The steel industry has been seeing some amount of traction, especially because there has been improvement in the domestic market, both in terms of demand as well as in terms of prices. Now, since there is an opportunity to acquire undervalued assets through the bankruptcy courts, and that would give companies which are acquiring these assets a far better, let's say, capacity growth, because the time taken also would be much shorter than building up from a greenfield projects. So this gives an opportunity to scale up to meet the growing demand as the markets continue to grow. So most of these companies haven't really built up new capacities in the last 2 years. So I think this is a good move, and we will see consolidation play out where the stronger companies will be able to acquire assets at lower cost, and that will give them operating leverage. So in the long run, over the next 2 to 3 years, once these acquisitions are complete and play into you'll see significantly stronger companies and much better valuations going forward as well.
Okay, just in moments from now, we'll also take in a stock call on Prabhat Dairy from Rahul. There's also a call that I want from Hadrien on Sun TV, because that stock has had some interesting last few days. So before we go to Fab 4, Hadrien, if I can ask you about Sun TV, 918, up 3%. What's your call here?
Yeah, Sun TV, if you see the overall trend, is in it's a very solid trending stock, and in fact, if you see the latest developments and the price behavior, we are seeing a good channel pattern breakout on the daily charts. Now, mind you, this is happening at the time where markets are actually correcting from their highs. So this is actually differentiating Sun TV from all the other stocks and even the market. So the breakout is actually pretty strong. You see volumes have been on an increasing mode for the past 3-4 days. It is also very well maintaining itself above the 21-day moving average, which is further adding strength and further accentuates our bullish stance on Sun TV. So I think it's a very good bet with a long perspective. One can go and buy Sun TV even at these levels post the breakout. One can play for a target of almost 1,000+ levels. Although it is going to take time, it will not come as in a short term. One has to keep a 3 to 4 months perspective for 1,000 rupees move on Sun TV. But one can keep a stop loss of close to 880 and can go long.
Okay, so can go long on Sun TV with those conditions that Hadrien spoke about. Does Hadrien have a view on some of the other mid-cap names that Yash Upadhyay is joining us with? The Fab 4 list of the day at 3 p.m. Yash, good afternoon. What's making its way to your list?
Good afternoon, Neeraj. So first up, we have Punj Lloyd making it to our Fab 4 list. Now, the stock had gained close to 13.5% today after the company said that it has received multiple orders worth close to 1,450 crores from GAIL and National Highway Authority of India. Also, we have DIC India. Now, this one was locked in a 20% upper circuit some time back after the company said that it has identified a buyer for its land property located in Mumbai, which is measuring almost 12,800 square meters. We don't really know who the buyer is, but that will be something that I'll be keeping an eye out for. Hindustan Copper is another stock on our radar, and it had gained close to 8% today, but tracking the kind of move that is there in the benchmark indices has corrected sharply from those highs and is sitting at gains of about 3% after the company said that it has reopened one of its copper mines located in Jharkhand. Now, this mine in particular had closed operations due to unfavorable economic conditions back in February of 2000, and with the opening of it, the company is expected to produce almost 2.25 lakh million tons of copper ore annually. Also, we have Orchid Pharma. Now, this one is up almost 4.5–5% today after the company said that it has received the all-important US FDA approval for one of its drugs used for the treatment of bipolar disorder.
Wow. Okay, thanks a lot for that, Yash. So some interesting names out there in the Fab 4 list. What didn't find its way to Yash's list though is Prabhat Dairy. That one is on a roll really, but Yash got us some very other interesting names. Let me talk about, by the way, that too has come off a bit in the last few minutes of trade with the markets. Before we thank Lancelot, a thought on some of these active names. Lancelot, I don't know if you have a view on those 3 or 4 tiny tunes that Yash spoke about, but Punj Lloyd featured out there on that large order win. Or I can ask you about the dairy space, because the kind of moves that Prabhat Dairy is making and some of the others are making certainly seems to be in the thick of things and right in the middle of investor buying.
Well, yes, I don't unfortunately have a view on many of these small companies, but the dairy business has been although if you look at it, over the last 1 year, the entire space has got re-rated and valuations have really gone up. And it has been one of the spaces that has been growing at where sales as well as profits have been growing at around 25 to 30% per year. So that is encouraging for the space. However, I think valuations, always run up in anticipation. Whenever you see a good growth story, then more money rushes into that space, and then the buying pushes up prices. So I think it's time to take a pause and maybe wait for a correction in these dairy stocks before one can really buy it. But if you have to have exposure to the dairy business in your portfolio, I think it's a good thing. One should wait for a correction and buy some of these stocks in their portfolios.
Leave it at that. Lancelot, thanks so much for taking the time out and joining us and giving us your perspective. Much appreciate. Dairy companies, Prabhat Dairy is on a tear. now up probably about 40% in the last 6 sessions. Rahul, any trading thoughts here?
Yeah, because as you said that the stock is already 40-45% in the current month till now. The stock has seen a breakout above 170 before a long consolidation from 2016 November. So definitely it has formed rounding bottom phase formation on the daily charts. So the stock has a momentum, and at current levels we have seen last 3 days have a sharp rally from the levels of 175 to 245. So yes, definitely at current levels the momentum is positive, but one has to wait for some correction. So I would be comfortable entering into the stock in the range of 201 to 205, and one should place a stop loss below 196. The short to medium term target would be 265 to 270. So definitely any correction should be used as a buying opportunity.
Okay. Thanks for that. Let's also take a quick check of how the world is doing, because while we are down, maybe the other global markets could be having a different tune, and while they might be marginally in the red, nowhere close to what's happening to our markets. There's some news flashes on the screen as well, or rather in one of the wire companies as well, talking about how there's some suggestions about asset-light models, narrow banking, focus on sectors and region. I don't know if that spooked the banking space individually as well or no. But maybe that could be one of the reasons why the Nifty Bank has corrected so strongly. 160 odd points down, now trading at the lowest point of the day with 62 points for the Nifty as well. Siddharth Sedani, Vice President Equity Advisory at Anand Rathi, with us on the show. Siddharth, what's happening to banks today?
Well, banks are really nervous. Overall market is also nervous on the outcome of Fed, and most especially on the outcome of the Fed commentary. And the bank, if you look at the data's macro points which have come, inflation is on the high, RBI looking at the last policy is less expected, or it seems like the rate cut in India looks little tepid going forward in next policy. So all these reasons are there where bank is little nervous. Overall, what we believe, still there is a good opportunity available in the banking space as well as market. The events which is lined up for Fed, Euro, apart from that the election results, all these events are giving ample opportunity in the market to pick up good quality companies. I think there are a lot of opportunities available in the banking space also.
Okay, but Siddharth, what are you advising about the PSU banks? The stocks moved up quite a bit after the announcement of recapitalization, but since then they have been drifting down, and also some of them have raised funds, so there is some amount of equity dilution as well. So if you look at some of the leading names like PNB, Bank of Baroda, Union Bank, Bank of India, what would be your view?
Well, in terms of PSU banking space is concerned, the leader which we like the most is State Bank of India. There are three most important reasons for getting into State Bank of India still at this price also is the results has been really coming good, slippages has been under control. A recap is one of the point which is making the balance sheet even more further stronger, and consolidation will bear fruits for the company in going forward in some quarters. So SBI is one stock which we are harping on. Apart from that, if you look at other PSUs, Indian Bank looks very interesting. There also overall the operational efficiencies have improved. Advances may grow going forward. Indian Bank and State Bank of India in the PSU banking spaces are preferred bets.
Okay, well, 310 or just about to hit 310. Let's wait and watch what happens in the last 15 or 20 minutes of the session. PSU banks is one aspect. The kind of fall that we've seen in certain private banks and NBFCs is the other aspect as well. So watch out for all of these pockets in the session today. Siddharth, if I just look at what's happening in terms of the gainers in today's session, one is of course the dairy counters which we spoke about. The other is cement, and this pet coke ruling that has come in from the Supreme Court has led to a flip in almost all of these companies which use pet coke as a principal contributor. JK Lakshmi, JK, Shree Cement has some gains as well today. Any of the other UP based companies would have some moves too. What are your thoughts? How big a relief would this be for any of the cement counters that you track?
Well, it is a big relief for these companies which are operating in the north region, especially Shree Cement and JK. Overall, this ruling had come before a month or so. So financially, I don't think there would be much bearing to it. But I would say this has bring in a lot of relief for north-based companies. Cement as a play. We are positive on cement. We like companies which are more focused towards South and Central India kind of belt. And we believe that December quarter results would be a bumper quarter results for these companies, because especially South and the Central India, the dispatches are quite good. We believe that there is a lot of improvement. Amongst that, one of the company which we are very aggressively recommending our investors, and we believe very positive in this company, is Heidelberg Cement. 6% volume growth is expected for this year. Going forward also, this run rate may improve. Overall, the margins are on the improvement path. And overall perspective, what we believe is it is more towards the Portland cement, and 100% is Portland. On back of it, operating profits are improving. So Heidelberg Cement one can look at with a target of 189 and 190. Apart from that, Dalmia Bharat is one company which has run up quite a good and has proved for us as a multi-bagger. But still, we believe there is a good steam left till the target of 3450. And because of a reason that we can expect a strong kind of a volumes coming in the southern part of the country.
Okay, so that's the call coming in on some of these cement names. Moving on to Bloomberg Edge. Earlier today, we got you the fear and greed indicator on HDFC. The stock was trading below its 50 and 100 DMA. Jayesh, for the benefit of our viewers, is joining us once again. Jayesh, take us through the technical indicator once again, and what are they telling you exactly?
So Pradeep, fear and greed as of yesterday's close had turned positive and indicated a buy signal on the chart of HDFC Limited. Now, as of today also, we can see that the fear and greed is still trading positive and has not dipped into the red. So, which means that the buy signal is still valid, though the stock of HDFC has not, performed as desired. But the fear and greed has also, not turned negative as of now. So we'll have to still wait and watch what actually comes out for HDFC. Now, if you look at the intraday chart of HDFC, it's very interesting because it did have a recovery, or it was trading rather flat. And post 2 o'clock, we saw that the market actually fell quite sharp, and that is where the sharp fall in HDFC also came about. So the trade is still valid. Do not question the fear and greed indicator. As per the validity, it is still trading positive.
Okay. Thanks a lot for that, and I presume the efficacy of this indicator is fairly strong as well, Jayesh. Just a quick note there.
Yes, Neeraj. So in the morning we had cited that this indicator has upside potential of about 15% if you had bought all of the indications in the last 1 year.
Wow. Okay. Thanks a lot for that, Jayesh. So do watch out for HDFC. Hadrien, any thoughts here? It's been amongst the principal contributors, upside or downside, over the last few days. Watch of the heavyweight that it is, but can it defy what's currently looking like in the markets and go on and lock some gains over the next few days?
Yes, Neeraj. In fact, I'm of the view that if there is going to be any kind of bounce back, it has to be led by HDFC Limited. And the sole reason here is the stock is very well broken out from this declining triangle pattern on the daily chart. It is very well, holding above its 21-day moving average. Thirdly, what is happening, very interesting, after the breakout, the stock has entered into a consolidation phase for the past 2 days. Today, we are seeing a little bit of price erosion, but what is happening, it is actually turning out to be a flag kind of a pattern. And once we see a breakout from this flag pattern, we'll see a very strong move in HDFC Limited. So definitely, if anybody is holding long positions in HDFC, it is a must-have. Even if you're a short-term trader, you should keep a stop loss of below 1690, and one can easily play for an upside target post the flag pattern breakout of close to 750 to 760 in the short run.
Okay, so these are the key levels to watch out for. Siddharth, are you tracking one of these dairy companies? Anything that you like, Prabhat Dairy or Parag Mill?
No, Pradeep, unfortunately, we're not tracking any of the dairy companies as of now, but there is a good traction in these companies been seen. There are a lot of buzz in these companies where there is a possibility of government coming out with some kind of a reform or change in GST, so and so forth. So on the back of those buzz, I think the entire sector is really buzzing a lot. But in particular, no stock recommendation from the space.
And do you like Punj Lloyd?
No, not at all. We are not recommending Punj Lloyd, Unitech and so and so forth of the world. There are a lot of ample of opportunities available in the infra space. In fact, we believe that next year, 2018, can be the infra year as a whole. And there are a lot of quality companies which is available in the infra space. We are not looking at Punj Lloyd or so and so forth, where there are high debts, balance sheets are tattered, where there is no safety for the investors to come in.
Okay, in just moments from now, we'll get in our research team members, Darshan and Yatin, to speak about what is it that dealing rooms are saying in the session today. In fact, they should be coming up any moment. Just while we do that and wait for that, mark a couple of other names. JK Cement has actually added on to gains. It's about 6.5% higher. The Nifty and the Bank Nifty too have just bounced back a little bit from the lows that they were trading at. So also the case for stocks like Hindustan Copper. So that's not done too badly. And today, certain stocks have moved up in contrast to what they usually do when the market's correct. So Motilal Oswal is a case in point, doing very well today, 3.5% higher. So good going for this one. Sterlite Tech is up about 4% today, and a strong move in that stock too, at 293 or 294. I would presume Sterlite Tech is trading very close to its life highs. So this one too is doing okay for itself. And as we said, there is strength in the oil marketing companies in the session today. They were the principal gainers at somewhere around 2 o'clock. After that, they cooled off. But HPBP IRC back, just nudging off from the lows that they hit about 15-20 minutes ago. So good going for some of the OMCs as well in the session today. Siddharth, IIFL is in news because of one of the subsidiaries that they had invested in. Also has Rakesh Jhunjhunwala subscribing there. There is also Motilal Oswal, which is up about 3.5%. Any of these businesses that you like? Edelweiss, MK, any of these?
Well, Neeraj, I won't be able to comment on this because as being in the peer set business, so we would not able to comment on this. But overall financial services, what I would say, if in particular, if I talk about broking side of the business, I think that is really fabulously doing good on the back of strong markets. There are a lot of product developments across. And apart from that, in the financial services NBFC side, we like housing space a lot, where there is an affordable housing, where companies like Indiabull Housing Finance, which looks very interesting because the last quarterly results were also, we've seen a 22% odd growth. And that is sustainable going forward for next 2 quarters. So Indiabull Housing Finance in the housing finance space, which we are looking in terms of NBFC is concerned.
Okay, IBUL's housing is looking good. So that's a call coming in from Siddharth. But look at some of the real estate names. We just looked at some of the mid-cap names. HDIL has also cracked in last few minutes. Rahul, if you just quickly look at HDIL, do you think there could be further downside possible going by the way it has fallen today with slightly above average volumes?
Yeah, if you look at the stock has been cracking from a very long period of time, maybe last 3 to 4 weeks. The stock has been correcting from the levels of 66. Currently, just it is quoting below is the major support, which was 53. So definitely, this sell-off could be extended, and it could drift down to the levels of 50 to 49 rupees. So definitely, at these levels, one should avoid. Let the stock to settle down around those levels, 49, 48, and then take a call. At this point of time, the stock is looking little more weak.
Okay. Let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin joining their channel checks. Good afternoon, both of you. Darshan, to you first.
Neeraj, one of the things that primarily as far as the markets are concerned, most of the dealers indicate that it's time to be very cautious ahead of the Gujarat election. The Nifty is down in today's trade, so there is enough caution that is there. If you're looking at some of the stocks that are being spoken about, Sun TV for one is seeing a lot of traction today. It's up 3% in a rather weak day. some of the large domestic funds are actively accumulating the counter. And the second stock that is being spoken about has been a marked outperformer over the past few weeks or even after the second quarter numbers is GM Breweries, a debt-free company, significant amount of traction in the alcohol space. Some of the HNIs are actively accumulating this counter. So that is something that what we are seeing. But Yatin, if you, what are your dealing rooms telling you?
BPCL, that is one stock in the oil marketing space which is doing well in trade. In fact, dealers are indicating that domestic funds are said to be buyers here. Apart from it, do watch out for a few stocks in the F&O space. CESE is one of them. And dealers are indicating that based on F&O trends, this is one stock wherein probable BTST kind of a trade, which is buy today and sell tomorrow kind of a strategy can be done. That stock is almost above that 1,000 rupee level, almost up by 1%. And Sterlite Technologies, in a weak market, we have seen a 5% up move come in as far as this fiber optic company is concerned. And Sterlite Tech dealers are indicating that HNIs are buying it for a short-term upside. So this is one stock you need to keep it on your radar.
Okay. Watch out for all of these. The markets have recovered a bit of lost ground though as we speak, so watch out for that as well. 3:20, good time to get in closing strategies from our experts. Hadrien, to you first, your top closing strategy today.
Yeah, I'll pick Sterlite Technology. You guys have discussed it a lot in the past 5 to 10 minutes. But even in my opinion, Sterlite Technology is a standout performer. In fact, if I look at the weekly charts, Sterlite Technology is on the verge of another consolidation breakout. It's trading in a very, very beautiful higher top, higher bottom structure, and it is a stock that one should not miss even if you are a short-term trader. So Sterlite Technology would be my pick, and one can play for a target of 305 in a day or two and keep a stop loss of close to 292.
Okay, Rahul, what about you?
Yeah, as we have discussed earlier, that the stocks into the cement sector is looking good. My pick would be ACC Cement, where the stock has consolidated and stock is poised for an upside rally from its oversold territory. Short to medium term, stock can test the level of 1780, and one should buy with a stop loss below 1690.
Okay, so these are some of the calls coming in from our experts. Let's have a look at how some of the key moving stocks over the last few minutes. Some stocks which have gained a bit from lower levels. You have Hinduja Ventures and you also have Punj Lloyd moving up a bit. You have Zen Technology. So there are some very small stocks that have kind of managed to move up over the last few minutes. If you look at some of the more active mid-cap names and see Sterlite Tech was one of the gainers that we discussed. Nitco has moved up a bit. JK Lakshmi Cement is doing a tad better. So these are some of the names which have seen some amount of buying emerging from lower levels, although market breadth still remains weak. But in last minutes of trade today, if selectively there is some buying emerging, it also means that there is not much panic really. Hadrien, how do you really trade in this kind of an uncertain environment, net to all the open positions that you might have or your clients might have for next few days? What kind of strategy have you suggested?
Yeah, as far as the Nifty is concerned, I think it's looking weak. As I even yesterday I told you that the Nifty, the overall structure is actually changing from a higher top, higher bottom to a lower top, lower bottom cycle. For the first time, we saw the previous low being breached, that is 10,094. Those were early signs where things might just change, and you see the things are really shaping into what we were actually anticipating. So I think the strategy should, at the current juncture, the way we have corrected in the past 2 days, I think we should hold on to our short positions, and every small rally that we see should be an opportunity to sell on the Nifty.
Okay, and Rahul, how have you really advised your clients to manage their open trading positions?
Yeah, Pradeep, if we talk about the overall chart, if we see the yearly chart of the Nifty, there is a very strong candle, a bullish candle on the yearly charts. We are into the year-end mode, so definitely I'm not seeing major downside because of the yearly candle is very bullish. If we talk about 2 to 3 weeks of the pattern of the movement in the Nifty, Nifty corrected from the levels of 10,409. It went back to 10,033. If the markets were bearish, it should have broken the psychological mark 10,000, but we didn't even manage to see those levels. From 10,033, it has rallied sharply in the last 3 days, or almost covered more than 75%, which was the ground which was lost. Now, if you look at the last couple of days of movement, looking at the yesterday's pattern, today trading should have been on the weaker side, but we didn't see such kind of a Nifty opened flat. It went up. It pierced more than 50% of the previous day's sell-off. Again, it came down. The momentum is indicating the lower level. There is a strong undercurrent into the markets, and on the coming days we are seeing Fed meeting as well as elections. And we are having a result of 2 states of elections. So it is a judgment day. So looking at the current levels, I would recommend to buy Nifty futures, but as well as at the same time, one should hedge the long side with buying puts, maybe the 10,000 puts and buy Nifty futures. As well as same thing should be used while buying Bank Nifty and buying puts on the lower side.
Okay, so you can definitely hedge your positions, and there are trades definitely opening up on both sides, long and short, and that's why probably we are seeing heightened volatility in the markets. Nifty inching above 10,200 once again. Nifty Bank also trying to manage a close above 25,000 mark. Well, these are the levels that we see as of now. If you look at some of the stocks which are kind of finding some amount of buying at lower levels, Sterlite Tech has moved up by another 2%, so that is one good stock. So these are some of the familiar names. Bangalore Chemical and Fertilizer is one which has moved up, and Mangalam Cement. So these are a few more mid-cap stocks which have improved a bit.
Okay, Siddharth, just before we wrap up, any recommendation from your end?
Of course, Neeraj, one of the recommendations which I just spoke about is Heidelberg Cement. One can look at buying this company with a target of 190, and we believe that this company has a potential to go up 6% odd. Volume growth CAGR is expected going forward. Operational efficiency can be perked up going forward. 100% Portland cement, and overall the company is really doing in central and southern part of the country. Apart from that, the second company would be Persistent System. I think this company with a target of 800, one can look at mid-cap IT play. The strongest play is, of course, IoT, Internet of Things, which they have tied up with IBM. Apart from that, services business has been really doing good for this company. 40% growth YOY was seen last quarter, 20% QOQ. Services business can do wonders for this company going forward. Persistent System can be bought. Fundamentally strong company with a target of 800.
Okay, stay on, Jaman. So much more to talk about. Let's go across to Pradeep, though, to start wrapping up the markets.
Yeah, so finally, all the indices are trading weak in last minutes of trade, a loss of around 0.5% or at least 1/3%. Most of the gains during the day have been erased. And if you look at Nifty, it's trying to close above 10,200, but you can't be sure because we take the average of last half an hour. So maybe Nifty will get a final figure which is below 10,200. Mid cap and small cap were actually underperforming on the upside in first half of the day, but when markets fell, they've kind of outperformed. Nifty small cap index is down 1.25% and mid cap index is down almost 1%. So there was some amount of panic probably in last hour of trade in mid cap space. If you look at the Sensex movers, very few gainers, 3 or 4 significant gainers only. You have Kotak Mahindra Bank, ONGC, TCS and DRL. That's it. Most of the heavyweights like RIL, HDFC Bank ending flat. So that could be a reason why Nifty is not looking that bad though. On the negative side, you have stocks like SBI, ICICI Bank, L&T, Infosys also that would have put a lot of pressure on the index. Tata Motors, DVR, Cipla emerging as the worst performers on Sensex today. Neeraj.
Well, thanks a lot for that, Pradeep. The mid-cap end of the market punctuated by, well, I'll start off with the gainers because there are a few gainers really. The cement pack really stands out. So good going really for almost all the cement companies. So JK Lakshmi Cement, JK Cement, or for that matter Shree Cement, all of these are having some good moves in the session today. What else? A couple of other names, non-cement, should come up on your screen. There are gainers in the dairy space. There are gainers otherwise as well. L&T Infotech came out with a business outlook presentation, and that stock has been well received, so up about 5% in the session today. There should be strength that we've seen in Sterlite Tech, so up 5% at 296. This is a life high for Sterlite Tech in trade. And then, as I said, the dairy companies have not done too badly. So Prabhat Dairy and Parag Milk doing rather well for themselves. 8.5% for Prabhat, about 4-5% for Parag Milk as well. So good going here. One sore spot that I thought amongst specific names was Unitech, down another 13% in the session today. So not a good outing for this one too. Pradeep, what else?
Okay, so let's look at how or which stocks really contributed to the fall today. Nifty contributors are the first up on your screen. You can see ICICI Bank and SBI on the negative side, while you have Kotak Mahindra Bank on the positive side, which contributed around 5 points. TCS was a key contributor on the positive side. Indian Oil is the only stock, and also HPCL. In fact, all the oil marketing companies remained key gainers through the day. This was one sector that really benefited from some signs of oil probably peaking out at higher levels around 65 or 65 plus levels. So that was a key contributor, although their weightage is not very significant. So net they could not really pull the indices up. If you look at overall how the markets have done today, so this is the market breadth, and what I talked about earlier, in the morning, market breadth was positive, and in fact, mid caps were not doing very well. Mid cap indices were not outperforming, but they were in positive. But in last hour of trade, we have seen significant selling, a lot of liquidation, so to say, and market breadth completely turned negative. So from early morning trade, when we had 3 gainers for every 2 losers, probably we reached a stage where there were 2 losers for every 1 gainer that we have. Now look at the overall heat map, and that tells you, how the picture has completely changed. Even if you had looked at it, at around 2 o'clock, there were more gainers than losers, but now you have at least 60 to 70% of the stocks closing in red. Very few gainers, as we had seen on Sensex. On Nifty also, you have oil marketing companies doing well. You have TCS, HUL, a few more names that really supported. But on the negative side, Vedanta was a clear underperformer. It has, I think, given up all the gains of last 2 trading sessions in today's trade. You also had SBI, Bajaj Finance, Yes Bank, ICICI Bank. So actually on the higher side, Kotak was more of an exception, because most other key financial names today closed weak, and they figured among the key losers. Hindalco also closing weak by 1.5%, along with Vedanta. So metal overall was again a contributor on the downside today. So that is how the picture really looks like, especially in last hour of trade. There was a significant profit booking seen in today's trade, and that is what dragged especially the mid caps down. Siddharth, especially in terms of what is happening with mid caps, there are individual stocks that have been doing quite well, but I would say majority of these stocks are now finding it difficult to sustain at higher levels. What kind of churn, what kind of changes in portfolio are you advising your clients to really execute?
Well, you are absolutely correct that they are running little ahead of the fundamentals, some of the companies especially. Likewise, what we believe is in the mid-cap space, one has to really categorize in terms of themes are concerned. One of the themes which we are recommending to our investors in terms of churning in the portfolio is specialty chemical. Overall, you have seen paper segment which is going up, dairy segment going up, some days some rice stocks going up. From there, what we are expecting is some specialty chemical play to be churned. Some of the companies, because in specialty chemical there are a lot of subsets. Some of the subsets which we believe is likes of Deepak Nitrite, RT Industries. I think specialty chemical is a mid-cap space where there is not big movement which is achieved, which is arrived in last maybe 3 months. There, the value is there. One can look at value picking in terms of specialty chemical play.
Okay, so these could be some interesting ideas or themes really to follow. Hadrien, one last question for the day, I think. Suppose there is something adverse in the commentary or the dot plot coming from Fed, and tomorrow if we see gap down, or suppose there is something positive and we see gap up, are there some break or break, very important key levels that you are watching for, both on Nifty as well as Bank Nifty?
Yeah, Nifty, as far as the Nifty is concerned, 10,200 was very important, and if I'm not wrong, I think we'll give a close below that same level, because that's the 50-day moving average that we saw, the Nifty respect in the early trades today. But unfortunately, the selling pressure has been so harsh, Nifty has been unable to hold on to that level. So I think once we see further weakness going forward in the Nifty, I think 10,030, which is the previous low, cannot be ruled out as far as the Nifty is concerned. As far as the Bank Nifty is concerned, the 25,000 psychological mark, and if I even take the previous low of 24,810, I think those are important levels which Bank Nifty would want to hold on to if there is going to be any kind of bounce going forward. So 24,800 is something that you should watch out for on the Bank Nifty on the downside.
Okay, I think we are short of time with that. Thanks a lot, Siddharth, Rahul and Hadrien, for taking time out for us. And before we say goodbye, here's a very special record set by India's stand-in one-day international captain Rahul Sharma. He scored his third double century in 1 day. Maybe Virat Kohli could not have asked for a better wedding present. And with that, it's a wrap on this edition of Countdown. Up next is Mutual Fund Show. Stay tuned to Bloomberg Quint Live.